Hello, welcome to Ms. Accounting Tutor's presentation on Perpetual Inventory Systems, Journal Entries, Inventory Purchases. My name is Mary Collins and I'll be your host. A merchandising enterprise is a company that resells items purchased from a supplier to the public. Purchase of inventory for a retail outlet is commonplace. All merchandise purchased for resale to customers from a supplier must be kept track of in the books. These records provide information on beginning inventory, purchases during a fiscal period. It also provides information on the cost of goods sold during a set fiscal period. Let's first look at the components and format of a general journal entry. You will start in the date column with the month and day. There will always be a debit in the account's title and description title, and this will be debited. So there will be a debit. Then there will always be a credit in the same column. And third, you will always have a description of the transaction. Please make sure to keep your descriptions short and concise. The debit will be the first entry. There may be multiple debits or multiple credits, but they must equal. Debits and credits must be the same numerically. Therefore, either they are the same, a debit and credit, or if there's multiple debits or credits, then they have to equal the same. Now, let's look at the purchase of inventory. The date on January 5th, 2014, so we will put that in the date column, 1/5. We purchased inventory, so we will debit inventory. It was on account, therefore we will credit or increase the amount we owe in accounts payable. Our description will be purchased inventory on account. The amount of the purchase was $500. Therefore, we will increase inventory, which is an asset account, by debiting inventory. We will then increase accounts payable, which is a liability, by crediting the accounts payable. This is the entry for how to record the purchase of inventory. Now we will do payment of freight in. Freight in is the charges that we pay to bring merchandise to the store for resale to customers. The date was January 8th. We will put 1/8. It was cash for delivery of inventory, so we will debit inventory for the cost because we keep all the cost of inventory in the inventory account in the merchandising enterprise. Then we paid it, so we use the cash account as a credit to pay for the freight in. And the journal entry is paid freight in. The amount is $75. We will debit inventory for the cost of the freight. This increases the cost of the inventory. And we will credit cash, which decreases our cash because it is an asset account. So this is how we record the payment of freight in the merchandising enterprise. Next is the purchase return to suppliers. Not all material enters our store without defects. Therefore, we must record any merchandise that we return to suppliers. The date was January 9th, so we will go 1/9. We returned merchandise, so we will do accounts payable because this reduces the amount we owe the suppliers. It's a credit, so we will credit our inventory, therefore reducing our inventory. and we will put the explanation of returned defective inventory. The $100 is how much we paid for the material that we're returning. So we will do accounts payable will be reduced. It is a liability account and the debit will reduce it. And inventory will also be reduced. It is an asset account and we will credit it to reduce that account. This is how we record the purchase return to suppliers. Next is payment. We have to pay our suppliers in order to continue to have the cash flow. So, January 15th, we record as 115 for the leases purchased on account. So, we're going to debit the liability accounts payable, paid. So, we will credit cash for the amount paid, but we will also credit inventory for any discounts earned. Discounts on merchandise that we have purchased reduces the cost of the inventory. And then we will do an explanation of payment on account. So first we will calculate what we have to pay. We started out by purchasing $500 of merchandise, but then we returned $100. So therefore we only owe $400. We will debit $400 to accounts payable, thereby reducing the amount we owe. Now, we will calculate a 2% cash discount on that $400. Note that we cannot do a discount on any merchandise returned. So, we will do 400 times the 2%, which will equal an $8 discount. This will be credited to inventory because it reduces the cost of our inventory. Finally, the cash payment. So we owe $400 minus our $8 discount equals $398 that we will be paying out in cash. Cash is an asset account, and by crediting it, we are reducing the amount of money we have, and we are paying down our debt. So this ends how to pay suppliers. We now have links. So here is the link to common account titles placed in categories. Here is my link on Perpetual Inventory Journal entries for purchases. And here is my website where C&M students can log in using their username and password and access these handouts plus any videos that I may have prepared for you. Please take advantage of these resources. I appreciate your time and energy, and I look forward to seeing you on other videos. Goodbye.